Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this special edition, we're going to be focusing on the third quarterly earnings of Syngene. The company has reported revenues from operations that are up 9% to 854 crores. The profits after tax have also risen 4% to 115 crores, and that's before the exceptional items. Remember, the company has reported performance in the 9 months to date, with the revenues from operations jumping 17% to 2,572 crores, and the profits after tax that have jumped 16% to 330 odd crore rupees as well. To share with us more insights on the quarterly earnings and the outlook going forward, I'm now joined by the top management of the firm. Jonathan Hunt now joins in. He's the Managing Director and Chief Executive Officer of Syngene International Limited. Welcome, Jonathan, and thank you so much for taking the time out for this discussion. Well, you've clearly mentioned in the press release that the 9% growth in the quarter has been affected by reduced funding in the US biotech segment, which impacted the demand in the discovery services division. Tell us, what is the kind of outlook that you would have here? Will this, performance be continuing to get impacted even in the quarters to follow?
Super question. Pretty happy with the results overall. 9-10% growth for the quarter, a little bit better than that on the year to date. At the mid-year, we talked very much about the shape of the year. Stronger in the first half, a little bit slower in the second half overall. And that was anticipating this slowdown in US biotech within the research services. It's actually affecting everybody in the industry. It's not a Syngene specific issue. And it's born out of rising interest rates, a little bit of slowing of the new capital formation going into the biotech sector, and then that's starting to feed through. Feels to me as though we're quite some way through it, maybe halfway, and looking forward for the rest of the year into next year. Maybe a couple more quarters for that to work its way completely through the system, through our P&L, and also through the other people in the industry. So, this too shall pass, as it were. I think it's a temporal thing rather than a structural thing. I would say, though, outside of the general market conditions are pretty good. Seeing good incoming opportunities from bigger companies, the biotechs, the big biotechs and the global pharma companies, seeing pretty good trends geographically outside of that US biotech sector. So big pharma in the US, Europe, the rest of the world, all of the market indicators are pretty good.
Okay, so that's like, market indicators somehow improving. When we talk about the margins specifically, I also wanted to ask you, what is the key factor that has led to softening of the margins in this quarter vis-a-vis last year, the same quarter, and the outlook going forward from here?
Yeah, so some of that's just mix effect, and it can be a bit volatile quarter over quarter. If you zoom out and start looking over 1 or 2 years, actually our margin structure, EBITDA, around 30%, pretty much around 30% every year for multiple years. So I don't think there's anything structural in margins that are changing, but it's a bit volatile quarter over quarter. You got to take a bit of a longer outlook there.
Okay. You've also made a very important announcement that you've concluded the acquisition of the multimodal biologics manufacturing facility from Stelis Biopharma. Tell us, how significant is this acquisition now for you in your future plans, and also what is the potential that this will now have in terms of the contribution to top line and the bottom line in the quarters to follow?
Yeah, sure. Really quite important because we'd started to bump our head up against a capacity ceiling. The deal that we did a year or so ago with Zoetis consumed a lot of the spare capacity that we had in the company, and we were really going to run into a problem of not being able to grow, even though there's market demand, because we're running at 100% capacity utilization. That triggered us to think about an inorganic solution rather than organic build out. A perfect match with Stelis. They had a facility that they didn't need. It meets our needs pretty damn well, and then we're just taking it from there. So I think we're going to see some good opportunity for future growth. But for the year ahead, we've got to retool what is a vaccines facility and turn it into a monoclonal antibodies one. So there's some internal work, some CapEx to be done, and then we'll.
Okay. Mr. Hunt, could you also share some more details on the investments in science, technology and digitization and how they now align with your long-term strategic priorities going forward?
Yeah, I mean, the CapEx plan through the year was pretty much about bringing on new capabilities. We've invested in a very, very automated DMPK facility in Hyderabad. We brought in a sophisticated compound management. That's on the research side. And then on the development manufacturing side, it's pretty much around automating, digitization, moving to a very much integrated manufacturing model where we can take manual work out, replace it with automated and roboticized. We'll do it, and that's what we're investing in at the moment.
Okay, a little bit on the CDMO business, if you could tell us what are the plans going forward from the company on this particular vertical?
Covered most of it. We think that we've got good opportunities in the biologics space. We were running out of capacity. We've added that with the Stelis acquisition. We've got a busy year ahead, getting that turned around to be ready for operations, getting it revalidated, and then we'll have lots of headroom for growth.
Okay. You know, there were also reports just about a few days back which were indicating that Biocor may be looking to sell a part of the stake in Syngene. Have you heard about that? Could you give us any more clarity on this?
Well, I haven't heard about it, but it's not something I'd comment on. Anyway, super question for you to put to the Biocon management team. It's not something I ever opine on.
Okay, you know, going forward, we are now entering Q4 and then FY25. Of course, the next few quarters in your key markets will also be dominated by a lot of political developments, elections going forward as well. How do you see the entire macro environment really shaping for you as well as for the industry over the next few quarters? And will FY25 really turn out to be a better year than FY24?
I hope so. I think there's good reasons to believe that it will, both at an industry and also at a firm-specific level. We're seeing general market conditions in Europe, in Asia, and then in the big pharma segment and in animal health. They look pretty good. I'm looking really for a bit of a rebound in the biotech sector, and I think it'll be a couple of quarters to work that through. And then as we go into next year, general conditions are looking pretty positive around growth opportunities.
Okay, well, fair enough. Thanks a lot, Mr. Hunt, then for sparing your time and speaking to us about the earnings this quarter. All the very best to you for the upcoming quarters as well, and we shall catch up very soon to understand more insights from you. All right, and with that, we'll wrap up this very special conversation with the top management of Syngene International. Slight subdued numbers this time around, but clear slowdown in the US biotech funding is something that has been a key pain point. There could be a couple of more quarters that the pain could be seen, but thereafter it looks like FY25 could turn out to be a better year than FY24 for the company as per the management. We'll wrap it up at that, but do stay tuned as a lot of action continues on your screens on the other side too.